everyone, I'm Stephen Kalayjian, and welcome to Back to the Futures. Wow, what a day we had here. You would think after NVIDIA's earnings, and it was down about 5 at one point, that you would think that you would see some big selling here in the overall market. But NVIDIA erased the losses. Actually, it was actually up 3 at one point. Now it's only down about 29 cents, 19 cents. But what do we see today? We saw a monster buy reversals here, monster buy reversals. Again, here's what happened today. On the bigger time frames, I always tell people you have to have the mindset when you come in each and every day to look at the underlying ETF. So today we got big buy reversals on the 30-minute, the 60-minute time frames on the Qs, and the Russell, the IWMs, and the diamonds on the diamonds, the Qs, and the Russell on the 60-minute time frames. And then we're looking to get a pullback. We got a pullback around the 12-15 time period. Not really a really big pullback, but enough of a pullback that actually really set the stage for this big push up. And let me show you exactly what happened. So we got the pullback here early in the morning. We have big buy divergences here on the 30 and 60-minute time frames. But again, what we really saw here, what we really saw here was a catalyst, all right? And when you see this type of a move, when you got the buy reversal right here on the 15-minute time frame. Well, that buy reversal technically, now it happened on the Qs, on the spiders, because I look at the underlying ETF and it correlated with the S&P futures, right? So now when the 15-minute time frame reversed to buy, we then got, and it correlated with the 30 and 60-minute time frames. Then what do you look to do? You look to buy the first pullback on the 5-minute time frame. And this was it right here. This is an absolute Picasso. So everybody in my live stream in my room was buying that pullback off the 5-minute time frame. And when you see a pattern like that, after the 15 correlates with the 30 and the 16-minute time frame on indicator 4, remember, my strategies are based upon combination strategies. Okay, so when you had 2 of the 3 bullish, the 30 and the 60-minute, and when the 15-minute time frame reversed to buy, then you do what? You look to buy the first pullback on the 5-minute time frame, and bingo, that's exactly what happened. And you can see on this pullback on the 5-minute time frame, the S&Ps were trading around the 47.5 range. But then when you got the pullback, right, you then say just the 15-minute time frames didn't really pull in as much. But now I'm expecting, I don't know, maybe late between now and 3:30, we may get a pullback on the oversold condition on the 15-minute time frame. So again, it's just something to look at, and it's just something to identify. Again, you want to be swimming with the tide, not against the tide. You want to be able to recognize the patterns. So right now, we're looking at the S&Ps making new highs, and the NASDAQ futures, and the Russell, and the diamonds. So what I'm looking for here now is potentially a nice, decent pullback here. We have 97, 98 overbought readings here. I think it's safe to say that I'd be looking for some type of a pullback here on the 15-minute time frames, on the IWMs, on the diamonds, on the Qs, and on the spiders. And with 2.5 hours left to go in the day, I don't know. I hope to get that. If not, we'll get that sometime tomorrow. Does anybody have any questions? Again, anybody has any questions, you can reach out to me at 914-500-7484. Gold's been a beast. Gold has been up probably right now about $160 in the last 3 to 4 days. We had a deep oversold condition. I want to show you this pattern here on the GLDs here, if I can. The GLDs, you can see here on the 15-minute time frame. Okay, I'm missing here. This pullback right here. Now we have gaps. We've been having gap ups here, right? And so when you have these big gap ups, you can see here, right, that when you got this pullback right here on the 15, I'm going to just shift this over to the 30-minute for 1 second here. That's the 15. Let me just shift this over to the 30-minute for 1 split second. You can see here on the 30-minute time frame, I mean, look at this. One gap, 2 gap, 3 gap, 4 gaps. I mean, gold was, the GLDs were trading below the what price is this here? Like the 235.60. So gold is up north of 100 points. Okay, actually more than that. Was it here? This price is 236.57. So gold's, yeah, about 100 points off the high. Now, one of the things I'm going to tell you, okay, is eventually these gaps are going to get filled, but you can see these consolidation gaps here. Okay, now it's getting long in the tooth here, so I'd probably be, if you're long gold, I'd be looking to sell gold here. But this 30-minute time frame, okay, you can see the big buying pressure, but the 15 really was the pullback here on gold, and gold ran about $7-8 on that 15-minute pullback. I want to show you the USOs today. Okay, I had someone that asked me this morning, hey, Steve, you know, tell me about, what do you think about oil? He said, I'm looking at short oil. I'm like, I wouldn't short oil. I wouldn't short oil. Number one, you had the number came out, right? But look at oil here, if I can show you this, okay? So this is oil. This is the 15-minute time frame. But the 30, I said that you can't, in my opinion, based upon my research, you really can't trade the underlying, you can't trade oil without looking at the underlying ETFs, right? And I did a big presentation about this a couple of days ago, right? And what's really important to understand is that wow, look at this. Oh my God, look at everything drop here. What I'm, just give me a second here. I'm just thinking too. Wow. What I'm looking at here, okay, is when you have the pattern setting up like this, you can see the 15 got deeply oversold, looked like it was going to reverse negative, but the 30 and 60-minute time frames were still very bullish. But the 15 did not reverse to sell. Okay, the 15 did not reverse to sell. So when you look here, okay, at the 30-minute getting deeply oversold right into the 10-bar weighted moving average, now that's 30 cents in oil. Oil ran 40 cents. So the USOs might have, what they run? They ran 40 cents from like looks like from 40 up to 85, and that's exactly what happened in crude oil. Crude oil exploded to the upside, right? So what I want you to understand is that using the underlying ETFs is really important. I don't care if you're trading oil, if you're trading I just missed the diamonds. The diamonds, I don't care if you're trading the YMs, you need to have the underlying ETFs aligned, okay? And it's very, very, very important that you follow suit on that, right? Because what you want to be able to recognize and understand is that when you're trading the markets, you really need to understand that you cannot just trade the continuous contract, which is the futures markets, without using the underlying ETFs. I've taught this to some of the top hedge fund managers in the country, okay? And they are amazed at how I'm able to identify these patterns. And I just want you to recognize that, okay? And recognize the fact that I'm teaching you something based upon my software and that how it's going to enhance your trading. So again, I just want you to recognize that, okay? Again, using the underlying ETFs, like I just showed you, when you're trading the continuous contracts, is very important. It's important because of the aspect that the math on the underlying ETF, I look at from 9:30 to 4, which is called RTH, real-time hours. I do not look at post-market or pre-market, okay? And what's important is that when you're trading the market, you want to be able to identify things based upon pure mathematics. So the continuous contract is going to have more data because it trades nearly 24 hours in the day versus the underlying ETF that trades only 6.5 hours in a day. And when they align very powerful. Okay. Let's see here. Wow, gold just dropped here, $2 here. MSTR just got kabooshed, down 11. Beautiful. So again, it's important to align yourself. Okay, it's important to align yourself with the understanding that when you're trading the markets, okay, that you want to be able to see things for what they are, right? Remember, I told you I have 5 conditions: a trend, a buy reversal, a sell reversal, a correlation, and a disconnect. And they're all predicated on my time frames of 15 to 30 in the hourly for intraday. And when you have these conditions, each condition has 2 strategies: a buy and a sell divergence. Okay, and when you see that, okay, then you get the when you get that pattern, you basically are then able to identify the trend. So today, when the spiders correlated at 11:15 with the underlying ETFs, the 30 and 60-minute time frame on my indicator 4, my algorithm, and also reverse on the correlation with the S&P futures. So that pullback that I just had earlier, okay, was very, very powerful. So powerful that when that got that pullback at 12:10, 12:05, 12:10, I knew the S&Ps were going to go up off that. That's the set strategy. That's the first pullback on the 5-minute time frame after the spiders correlated on my indicator 4 with the 15, the 30, and the 60-minute time frame. Very, very powerful. So the first strategy is to buy the pullback on the 5. The second strategy is to buy the next pullback on the 15. So again, does anybody have any questions here at all? It's a very set thing that I do here. I've taught this to so many people around the world. For me, there's no greater joy than to be able to teach you this. If you put your mind to it and you just focus, great things should happen here for you. Again, every single day, your goal is to be consistent, hit your goal, and then every day to be green each and every day. There's nothing worse than being up money than giving it back. And then especially when you hit your goal, you then go and you blow it. Okay, really, in all honesty. Again, today there was so many divergent strategies here in Coinbase, MSTR, AMD. I mean, you know, Nvidia has been wild. Nvidia has been wild. You had, and that's what's really causing the market to have all this fluctuation today here. But again, looking at the gold here, you can see this beautiful pullback on the 30-minute time frame, and the gold futures were trading around the 65 and a half, and the gold actually ran $10 off that 30-minute time frame. So again, very important. And we got Bitcoin just hit 98,500. You know, Bitcoin's gonna hit 100,000. You know that, right? It's just a matter of time and when. Okay, I mean, since the election, I think the Bitcoin is up from 76,000 all the way up now almost 22,000 points after the election. President-elect Trump actually bought McDonald's using Bitcoin, so he's a Bitcoin fanatic and he believes in it. I think this morning I saw that he named someone the Bitcoin czar. So, you know, again, it's all good, but in the end, what you want to be able to recognize and is to be consistent, right? My 5 keywords: be consistent, be disciplined, have confidence, have patience, and then have passion, right? And that to me is where it's all about. You want to be able, okay, to allow yourself identify the patterns. Okay, there's oil just now. Oil just ran 10 cents. Okay, beautiful pattern on the USOs on the 5-minute. So I'll show this to you right now here. So we know that all 4 of the big time frames. So on the USOs right here on the 5-minute pullback, the USOs went from 71 to 83. And I'm looking at crude. There goes crude. Boom, 15 cents on crude. Boom. These patterns, I spent nearly 10 years of my life, okay? And I like, me personally, I like trading the futures markets off of the underlying ETFs, hands down. It's more cleaner, it's less data, it's less noise, but it also gives me the confirmation as to what truly is going on in the market. And that is important for me, right? So if I'm trading, now, if you just look at this, the crude oil, I'm negative on the 15-minute time frame on my indicator 4, but I said, you know what? There's the 5-minute time frame reversing to buy on crude, okay, right here. I could have taken a small little short, look for the pullback, or you just wait for the pullback. And that pullback right there, crude oil dipped down to 71, 72, 73, and then just traded up to like 85, 88. Nice little 13, whether it's 8 to 13 cents on crude, it's still a profitable trade. But you wait, it's pure mathematics allowing you to be patient to wait for that trade to happen, okay? And again, if anybody has any questions regarding to talk to me about how to getting the software, you can just reach out to me at 914-500-7484. Does anybody have any questions here at all? Anybody? I love what I do here. Again, my legacy depends on your success, but it's important that each and every one of you can use technology like this to really enhance your life and really to learn the strategies, learn the patterns, and give yourself an unbelievable chance to really do well in the market. And why do I say that? It's because, you're dealing with someone that's got over 41 years of trading experience, okay? And it's important for me to enlighten you on technology that you have right here that I'm showing you. I put in the hands of some top hedge fund managers in the world, some top people, okay? So again, and for me, I think that having technology like this, you having a mentor like this, is why I say you instill the word of confidence inside your trading. I love the game of baseball, okay? And there was nothing greater than for me to wake up and to play. I could have played baseball 20 hours a day, right? But I took these 5 words: the consistency, the confidence, the discipline, the patience, and the passion from my game of baseball. I'm being bluntly honest. I took that into my game of trading, and from the game of baseball into the art of trading. So people say, how did you take the time to do this? It wasn't take the time. It took me nearly 10 years of my life, right? 10 years of my life and a lot of money of my own to do the research and build this and come up with this, right? And again, it's what I use to trade. It's what I use to my live stream. It's what I'm doing to guide people and educate them and teach them. I mean, yesterday we had a beautiful pattern in NVIDIA on the 15-minute time frame that so many people jumped in and it moved the market up. A couple of days ago we had some 2 days in a row, yesterday and today, where I come in, the first thing I do is I look at the bigger time frames on the underlying ETFs, the spiders on the 30 and 60-minute time frame, and we made new lows 2 days in a row. And what happened? Boom. Okay. They bounced right up because the MACDs on the 30-minute time frame and the 60-minute time frame did not confirm. So when they didn't confirm, okay, wow, diamonds dropped. When they didn't confirm, the next thing you got to remember is what, right? The next thing is that if they didn't confirm, okay, now you want to be able to do what? You want to be able, okay, to be in a situation to buy them. So the price is making a new low, but the MACDs did non-confirm, and that's that. That's all she wrote. Okay, that's all she wrote. Wow, MSTR just got kabooshed. So again, what's really important and truly, and there goes oil. Oil just ran just now like 15 cents because look at the 5-minute time frame. Here it is. Okay, it got down to the 7. What did it get down to here? What was the low here? Maybe 69.70. So that's 18 cents. Okay, on oil, on the USOs, and there goes oil. Oil traded down to like, I think, maybe 71, 72. So there you have it, right? There you have it. Okay. So when you get these pullbacks of this magnitude, you say to yourself, okay, that what you're able to do is, for me, there's nothing better than looking at the underlying ETF. So this gentleman this morning in my pre-market segment, he says, I'm looking to short oil. I'm like, I wouldn't short oil. Why? I'm looking for pullbacks in oil to get long. Now, we did have the number that came out today. But again, without technology, it's all guessing, right? And that's what I'm trying to prohibit people to do, is stop guessing, be consistent, see the pattern. I saw oil, okay, on the 30-minute time frame on the USOs. They got below 72.50. They're now trading 72.87. So right there, or just off the 30-minute time frame, getting oversold into the positive MACD. There's no way looking like it was going to reverse to sell. And you know what? To me, you got to remember one thing, and that thing is that when you're trading the market, you want to be able to put the odds in your favor. Just don't come out and blurt, I'm looking at short oil. Okay, when I said, I don't know why you would think that when I have underlying buys on the 15, 30, and 60-minute time frames. He said, wow, you know what? Thank you so much for helping me with that. And, I'm going to look at the software. I'm going to use it, right? Because, technically there's about 1 million people in the world who sit in front of screens each and every day, right? But we're going to build some cool stuff where these alerts are going to go out to people. That's right. Boom. You're going to get alerts here on a phone or email, and you're going to see the conditions in the market. We're going to alert you to the conditions in the market, intraday, intermediate, and long term. So, remember what I'm telling you here, because if you can make $500 a day, that's $125,000 a year. And listen, just picking your best patterns and just waiting patiently. Remember, my 5 key words, one of the favorite words is patience. So when I saw the S&Ps, the spiders correlate on the 15-minute reverse to buy in the 15, it correlated with the 30 and the 60. I said, okay, I'm going to just wait for the nice pullback on the 5-minute time frame. Now, from that time, from 11:15 to 12:15 is exactly 1 hour. And guess what happened? Guess what happened? Boom. We got the pullback an hour later. And then 1, 2, 3, 4, 5, 6, 7, 8 bars. The S&Ps ran from the 48.5, 49 maybe, and it ran all the way up to 71. That's not bad. 22, 23 handles on the S&P. So again, what's important is you need to wait patiently, have the right software in going for you, which I believe is what I built. Okay, and then allowing yourself to wait patiently for the next setup. So we got the pullback on the 5. Now I'm going to hopefully get the pullback on the 15s. And when you get these pullbacks, oh my God, diamonds! When you get these pullbacks, what you're saying to yourself, okay, is you wait for some oversold condition on my indicator 3 to get a deeper pullback here. Okay. All right. So there goes oil. Let's bring up the spiders again here really quickly. So again, like I said, you're starting to see the 15-minute time frame starting to roll over. I really would like to see the oversold condition looking like this, but I don't know. We have like 2 hours to go here, so I don't know if that's in the cards here. To be bluntly honest with you, let's see here. Bitcoin just dropped about 500. Okay, may not be the day today for that move. To be honest with you. So I think we're probably looking at probably happen overnight, where you'll get the move. You'll probably get the move up here, over 100,000. Does anybody have any questions here at all? Anybody? Anybody have any questions at all?
There's a question, Steve.
Okay. How important is the pre-market hour and the opening hour for you? Very important, Martin. It's very important because, one, I look at economic numbers. I look at my economic calendar to see if there's anything in the marketplace that's going to arise the market. Remember, out of the 22 business days in a month, right? Out of the 22 business days in a month, what you remember is that you have unemployment numbers, CPI, PPI, durable goods, GDP, housing starts, and unemployment numbers, CPI, PPI, durable goods, retail sales, GDP, and housing starts. Okay, I hope I didn't overlap that. So there are 7 key numbers out of 22 during the month, and you wait patiently for these patterns per se. Okay, you wait for the numbers to come out, and then sometimes those numbers can actually, there were times when I saw the S&Ps up 100 or up 200, or when the CPI number was 9 and it was better than expected, it dropped down to 7.5 or 7, and the S&Ps were up 100 that day. So again, you got to be cognizant of the numbers, but like yesterday there was no economic numbers, and we had great trades in gold. Now, you could use the software during the Tokyo or European session coming into the market, but you can't use the underlying ETFs during that time because of the fact that I only look at the RTH real-time hours for the spiders, the Qs. Everything, all the stocks and ETFs from 9:30 to 4. I don't want my data flawed with data prior to the opening or pre and post market on the underlying stocks and ETFs. Okay. Great question, Martin. Thank you very much. Does anybody have any questions? If you do have any questions, you can feel free to text me or call me at 914-500-7484. But again, it's important that all of you be consistent, learn to trade the right way, efficiently, effectively, and to be able to allow yourself to have the understanding of the markets in a way. So gold just ran 2 on that beautiful oversold condition just now. The GLDs just ran 20 cents. And again, what's important, there goes Bitcoin, just rallied 300. So again, what's important, okay, is to be able to allow yourself to be in a situation, okay, to give you the ability, okay, to trade the market, be consistent, put the right tech software, use the multiple time frames, the 3 to 5 to 15 to 30 in the hourly, right? And be able to allow yourself to identify these patterns, learn from someone who's got over 41 years experience. August 1st of 2025, 42 years. Can you believe it? I have no regrets. I love doing what I'm doing, and I'm here to help each and every one of you. Have a great weekend, everybody. God bless you. God bless the United States of America. And I'll see you here next Tuesday at 1:30 at Back to the Futures. Be well.
You know how the financial world goes. Here comes the buzzkill. Please make sure to take some time to read this boring disclaimer. We will owe you one.